In Boston, over the past year, job growth levels haven't changed, apartment construction levels haven't changed either, but rent growth levels have dropped off, and a lot. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Boston update. Let's take a look at what's going on with rents in Boston's apartment market. Not long ago, Boston was regularly ranking among the nation's top rent growth markets. Annual rent growth levels in Boston came in around 4 to 8% from Q3 of 2010 to Q3 of 2012. But then the slide began. Rents up 3.3% annually as of Q4 2012, and then as of Q1 2013, year-over-year rent growth measured just 2.6%, exactly in line with the national average, and this marked the first time in more than 4 years that Boston did not top the national average. Now, the slowdown in rent growth has been seen in every product age group and in nearly every submarket, so what's driving it? Well, typically we look at two things. First of all, job growth, and second of all, apartment construction. Let's start with jobs. As of Q1 2013, year-over-year job growth totaled 41,700 jobs. How does that compare to a year ago? It's the exact same number. In Q1 2012, Boston posted year-over-year job growth of 41,700. Boston's economy has done pretty well in recent years, and annual job growth levels have been consistently coming in right around that 40,000 mark for quite some time. Now let's look at apartment construction. 1 year ago, in Q1 of 2012, there were 6,253 units underway. 1 year later, in Q1 of 2013, there were 6,558 units underway, up only modestly. Now, once built, those new units will expand the inventory base 1.5%. That's a pretty big number for Boston, but certainly not a scary one, and not much more than what we saw a year ago. Now, that said, construction is certainly playing a role in Boston, particularly since the first large blocks of this new supply is starting to come online, and that's especially true in certain submarkets, and we'll talk about that a little bit here. But let's first drill down to the real concern in Boston, and that's been a surprising drop-off in apartment demand. This chart shows you annual supply versus annual demand, and you can see the supply line in purple. It has started climbing again, but not quite to where it was prior to the recession. But demand levels in red, they've really fallen off. And it wasn't a surprise to see demand drop off from those peak levels at first, since vacancies had dwindled. But now, with some new units on the market and with continued gains in the economy, you would expect to see some better demand for apartments. And I'll be watching for this over the next couple of quarters when we get to the seasonally strong leasing periods as the weather warms up. Certainly too early to call this a major concern right now, given that we've just gone through the slower leasing months, but we'll be keeping an eye on that. So as a result of these trends, occupancy has cooled off a bit, though still in good shape. Peaked at 97% of Q2 of last year, down 50 basis points since then to 96.5. Again, still a very good number, but it could be that with softening demand through the winter months and with construction levels remaining pretty significant, operators are consciously limiting rent hikes. And nowhere is that more evident than in town Boston. A year ago, rents there were up 11% year over year. Now, as of Q1 13, rents were actually down 0.2% year over year, even though occupancy was still strong at 96.8%, but it has come down a little bit. And there's a very large block of construction underway, 2,550 units being built as of the end of Q1. So what does all this mean for the Boston apartment market going forward through the next year? Well, again, it'll be important to watch those demand numbers in Q2 and Q3 as the weather improves and as supply levels pick up a bit. We do think that apartment demand will improve somewhat, but probably not enough to keep pace with new supply. So we're expecting occupancy to inch down just a bit further and for annual rent growth to come in just under the 3% mark. And that wraps us up for Boston. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.